Hello, everyone, and welcome to this session. It's called Credit Unions and FinTechs, How to Create a More Perfect Union. I'm very excited today to bring a panel together so we can discuss how you're going to engage FinTechs in the future. Once was thought they were sort of competitors, and then they were vendors, and now they're kind of partners, or are they? And we're going to find that out today. We have an incredible panel today of guests who are going to talk about this, a lot of digital experience within this group, within the credit union space. But before we get started, my name's John Best. I am the CEO of Best Innovation Group. We like to do cool things for credit unions. I'm also an author. You can check my book out on Amazon called Breaking Digital Gridlock, and maybe that gives me enough credibility to hang with these people. So I'm very excited to talk with everyone today. So we're going to go around and do just a quick introduction so we can find out a little bit about everybody in their credit union. So let's start with Martin Walker, the Vice President, Digital Experience and Innovation from Sound Credit Union. Hi, Martin.
Hey, John. Thanks for having me here today. So Sound Credit Union has been around since 1940. We're based out of Tacoma, Washington. We're right around the 2.3 billion asset size, 28 branches. And our core provider is Scimitar Epicus on-prem. We use NCR Digital Banking. And we also have a enterprise service bus that runs on the Modusbox PortX platform, and a lot of our integration is handled through the API layer through the ESB.
Oh, that's fantastic. I think integration layer is going to be really important. Just real quick, how long have you been with the credit union, Martin?
I've been with Sound for just about 3 years, and that is the extent of my credit union experience as well. I'm an outsider. Worked in a few other industries, and so it's been an interesting journey learning about credit unions, and I love the purpose and the movement, and I'm just thrilled to be part of it.
Awesome. Well, welcome to the industry. You know, we don't let you in until after 10 into the clubs, but soon you'll.
Exactly.
Soon you'll. All right. Well, let's move on to Ben Maxim, Assistant Vice President of Digital Strategy and Innovation at MSUFCU. Hey, Ben.
Hey, how you doing, John? Thanks for having us on and hosting us. Been at MSUFCU for a little over 13 years. We'll be 14 in July. The credit union was founded in 1937, affiliated with Michigan State University. We're based in East Lansing, Michigan. We're closing in on $6 billion in assets, and we may have got there with the stimulus checks as they've been coming in. We are on the Jack Henry Epicus on-prem solution. And we've done all our own online banking. I've done so since just about the time I started at the credit union. So we do a lot of in-house development.
Nice. That's going to be good to have someone who has that skill set on the call. Welcome and thank you. And local geographical compadre, Kelly Wagner-Grupp, Director of Innovation and Member Experience at the Credit Union of Colorado. Hey, Kelly.
Hi, John. Nice to see you again. Happy to be here and grateful to have Credit Union Colorado join this panel with the work we've been doing. We were founded back in 1934 with our Colorado State's Employees Credit Union, and then have since adopted a broader title with the Credit Union Colorado. We serve about 147,000 members. We just reached the 2 billion mark, and we too will round out that we are a Jack Henry shop. In regards to on the Epicus product, and have partnered with our online, our digital banking provider, which is Typhone, and more currently, we've actually begun integrating with a middleware solution with Del Boomi, and that will provide us a lot of different options as we move forward. So thanks for having us, John.
Oh, thanks for being here. Okay, so let's get to it. So starting off, let's just frame this up a little bit from the fintech perspective. So fintech started to show up, and first they were framed as sort of the enemy, and we were worried about them becoming banks, and that was a big issue. Then as time went on, it became clear that one, becoming a bank was difficult, and two, that getting scale that they would need to leverage the business models they have was also becoming difficult. So with that in mind, we saw them sort of start to partner in industries. We also saw big banks start to put together fintech accelerators and fintech incubators. You know, there's some notable ones out there. I know Wells Fargo does something. I know Citi does something. And so they started sort of grabbing up a lot of those fintechs that are out there. But a lot of the fintechs, because of, and I think Martin, you sort of alluded to this, you know, being new to the industry, their philosophies and the type of business they wanted to run really aligned with the industry. And so they found themselves really drawn to credit unions and working with credit unions because the services they were trying to provide felt a little more aligned with the credit union philosophy, the people helping people sort of thing. So here we are in 2021, coming out of the pandemic. A lot of people, you know, I've heard some economists, particularly the World Forum that was announced last month, talk about this new reset, right? The Great Reset is what I've heard it called. So we're coming out of this pandemic, and we now have sort of changed the game a little bit. We've seen that digital transformation has been accelerated in a compressed time, something that none of us could have imagined when we were making our business plans probably in October of 2019, trying to figure out what was going to happen. As a matter of fact, I think, Kelly, I was on site with you, you know, at some point during that time. But here we are. So I want to start off by just asking this question. I'm going to make this an all play. So that means I'm going to ask everybody here, but what are some of the innovations, objectives, services, goals that you faced that you look to solve right now through a partnership or a vendor? And keep in mind, I do want to get to the point of asking, what is the difference between a vendor and a partner for you? So we'll get to that terminology in a little bit, but let's mix it up. Let's start with Ben, just because I find it interesting when someone builds their own, the context of what you will go out and partner with and what you'll build, and what is the threshold for that. So go ahead, Ben.
Absolutely. So yeah, you know, 10 years ago, everything we wanted to build it all ourselves. We built quite a suite of products, and then, you know, it became unmanageable. You know, you have to hire the staff to maintain it, you know, and have the ability to make new products. There's a lot of things that are maybe more compliance driven. So really in that build versus buy, sometimes it's a build versus buy and then a buy then customize ultimately. So we've learned, you know, over time that, you know, there are some things that, you know, we don't need to build ourselves, you know, things that fall in that compliance, you know, like a mortgage LOS type system. You know, there's a lot of changing laws with mortgages. So, you know, we're not gonna be able to keep up with that and be able to do all the other things we want to do. There are also things that may be more considered a table stakes kind of scenario where we'll want to, you know, just, you know, we don't need to build ourselves. We're not going to bring any strategic value by building it ourselves. So we'll just purchase those items. Sometimes the strategic value is in having, you know, less expense, because some of why we headed down this build everything path was because of the per member per month model, and the projected growth we had, you know, really didn't support that in a digital platform. So we've grown quite a bit and kind of have moved more towards the can we buy it and then customize it is an ideal situation for us. And then you know, the first 12 and a half years of my career was part of our software development team. In that last year, leading that team, we worked on a partnership with a AI startup to put in an AI-based chatbot. We didn't have the AI skills on our team. We wanted to get it out quickly, so really looking to speed to market. We started down that fintech partnership, or, you know, AI startup partnership, and we learned during that time that our kind of due diligence model was a legacy model. So a lot of the delays in that project were on our end because we weren't able to keep up. We weren't able to get the right documentation or, you know, security things in place that we needed to from that company. Their startup probably shouldn't expect that, you know, like we were from these mature vendors. And I know we'll get into that discussion later, but we were trying to treat them like a vendor, and that didn't go as quickly as we hoped it would. And that led to kind of the creation of my position and our ability to partner with fintechs moving forward, and really this concept of try it before you buy it. So really the partnership and kind of being able to set up a pilot where we can try something for 6 months, 3 months, a month, you know, get that proof of concept out there, get it in front of members. We created what we call the lab at MSUFCU as our innovation center, so we can get these products in front of our membership early on in the design cycle, and also, you know, have a member panel that's dedicated to kind of being our ever-growing focus group in digital to understand, you know, what are they looking for, and we'll ask them questions like, should this be included in our mobile app, or do you feel like you'd be all right using this as a standalone kind of white label app to get it out there quickly and start the testing.
Interesting. So having not flexed that vendor muscle, if you will, for a while, you found that the process was that needed some updating because you were used to building yourself. So you would have requirements, you didn't have to worry
Yep.
about talk to and
Right.
all the other things. That's
Exactly.
interesting. Kelly, so talk to me about how you guys have made some major changes recently, and I know you've been continuing to make those changes. Talk to me about how what things you've solved through those types of interactions with either fintechs or what have you.
Yeah, absolutely. And I want to piggyback honestly off of what Ben, Ben's description of really is the architecture, right, of trying to say how do we partner better with these fintechs. As we all know, credit unions are not going to have the resource capacity that a larger financial institution will have. And so what can we do with these partnerships, right? And using the words like pilots, using the words like, MVP, minimal viable product, to get something into the market, to the members' hands, to be able to test and to feel, to be able to get real life feedback on if these solutions work versus the legacy approach we've had with vendors where you partner with them and you're in for 5, 6, 7 years until their solution no longer works. And so definitely agree with saying, hey, for us to have digital innovation or what I like to think is a digital first era, really being able to have credit unions and fintechs, because our DNA, as you mentioned, John, is very similar, right? Very end user centric. And so what can we do to form a better partnership with them? What can we do to make sure that we're keeping scope and prioritization and iteration all part of the conversation, and that you're not just buying technology to sit on a shelf, but you're buying and partnering with fintechs to be able to really allow that evolution where we're making them better with our ability to scale and have the access to member and the thing they crave, which is experience feedback. And then how can we complement that by allowing the fintechs to push us to move faster and to have repeatability and sustainability of what the market is expecting and demanding. Some of the things that we are working on in regards to digital innovation really focuses around a couple key things, right? That's going to be that personal self-service options that members can then pick and choose, and that you're able to cross over channels very quickly based on where your needs are at. Certainly that digital money management or digital experience that you can have. How do we bring consultation to the couch, to where the member's at? The payment space, I think, is also a place where we will continue to look to some fintech skill set or muscle to help us continue to ideate upon how we make sure that money is moving where members want to move it, and when they need us in that payment space. I think will continue to be a place where we see the relationships and the intersections happen very, very closely.
Yeah, and I think you mentioned your purchase of your middleware, basically. I can't remember the name of it. You said it a minute ago, and I took Del Bloomy. That's it. I know Modusbox very well, and I just talked to an organization that had implemented Del Bloomy that was very happy with it. So congratulations on that, and that does feel like an enabler for what you're trying to do. So Martin, for you, I want a little different concept here. I'm interested in your previous life that you weren't in the credit union. I think it's interesting that more and more credit unions are going outside of the traditional sort of methodology, which is to promote someone from within into some of these positions. They're looking to other industries, particularly ones that have been successful in the digital space, to acquire talent. And so that's a story in and of itself. But maybe as you answer this question, give us a little context on your previous life and how that compares and what you've been able to see, and being candid, whether you're having to play catch up or whether you're seeing opportunity there to leverage some of your skill set.
Yeah, absolutely. Pretty varied background, I suppose. I spent a number of years in sports and entertainment. I was with the Seattle Sonics NBA team for about 10 years before they moved on to Oklahoma.
What was your position?
Yeah, third bench warmer. Yeah.
Oh, okay.
Yeah, 5'7" doesn't translate well on the court, but luckily that's not what I was there for. Spent some time in the coffee industry, spent time in the retail industry, and one thing that was a constant was I always found myself at the intersection between the digital experience, the business, and the technology. I was always kind of right in that sweet spot, and that's where I've found myself with Sound. Our previous chief information officer, he and I worked together in the coffee industry about 15 years ago, and so he recruited me over when he was brought on board to execute a digital transformation. He reached out to me and said, I need you to come help me do this thing. And I said, let's do it. I know nothing about the financial industry, but I can learn. And probably the first thing that I found that was really exciting is the credit unions have an amazing amount of data, of information, the type of data and information that if I had that in my past life, it would have been incredible. And so part of the question is, how do we take that and use that to make the ultimate member experience, to use the data for good? And in a lot of cases, what we're finding is that these partnerships with fintechs allow us to bring a better member experience, a more customized, more personalized member experience that can leverage that data and also take advantage of that focus on being there for the member versus, say, being there for shareholders or a private ownership group, whatever it might be. And so that's been a really exciting part of the journey, and that's something that we've been able to work with some of our fintech partners to really enhance that member experience.
So what I'm hearing across the board on this question, which I thought was interesting, is we need to be, all of you said, we've got things we want to, holes we want to fill, services, products, things that we want to provide for the member that we want to fill through fintech. I'll say partnerships. I'm hearing partner from everybody. But we also have to get our own house in order. And I think it's interesting. So from Martin's perspective, he recognizes that the data on hand could be very valuable to a fintech partner. I'd be curious if you're making that available through Modus Box so that they can be more effective. From Ben, it's leveraging your already existing. It's kind of converting your build versus buy to an integrate, more of an integrate sort of process. And Kelly, it's taking the pre-existing tool sets that are out there and melding those together to create an offering. And I was having a conversation, I think yesterday, with a group of people, and I said, the first credit union to create, and I'm going to use MSUFCU, the first credit union to create developer.msufcu.com, where I can go in, sign up, download an API, get all the information. That's going to be the big win. And it's not really open banking as it's been described by PSD2, but I'm fascinated on, it seems like that's where we're headed. And if you look at all the other major players in the ag industry, you look at John Deere, they're doing that. They have the developer.John Deere. They've opened up their APIs so that people can take their products and do more with them. What happens when we open up bill pay and let other people use bill pay in their services and their products? So it's an amazing world we're heading into. But with that in mind, we were all on this track anyways. We were all, there's nobody here that was sitting around going, before the pandemic, going, yeah, that digital crap, that's not good. We're not doing that. We're staying legal pads and pencils. We call ourselves Legal Pads and Pencils Credit Union, right? So we were all on that journey. But then we hit the pandemic. And I'm curious as to whether the pandemic accelerated what you were doing, or it slowed it, or both in different instances. So I'm going to start with Ben on this one. And Ben, what do you got?
Yeah, no, absolutely. So it did a little of both. You know, it accelerated a lot of things. We were trying to be a digital first credit union in the first place. We have roughly 30% of our membership that lives more than 30 miles from a branch, 14% that live outside the state of Michigan. So there was a huge need for digital. A lot of people come to MSU for school, and then they move on and go all over the world. So really trying to support them and helping them understand that you can keep your account. We can provide you all these services in the meantime. I started my role of AVP of Digital Strategy Innovation with the thought of expanding that in January of 2020. We had kind of a 2-year plan to do all these different things. Come to find out, hey, there's things that change those plans on us. Pretty drastic things. So COVID came around in March, and we accelerated plans. We started closing branches. We had all these plans to bring technology into the branch, touch screens, all kinds of stuff, so you could have more of a kind of omni-channel mixture of physical and digital presence in the branch, and start something online, bring it into the area, and that's come to that had to slow down. We didn't have people coming to the branches. It didn't justify swapping out technology in every branch to be able to facilitate that. But we also needed a way to still connect with those members that wanted to have that face-to-face experience with us. So one of the first pilots and partnerships we did was with a company called Pop.io that had a video banking solution that recreate a lot of what you can get from an ITM experience, but it's now on your mobile phone. You can access it anywhere. It allows us to be able to maintain those relationships with our members, and it was well received. From the time we signed the contract to our first member call in a pilot state was 5 weeks, including training the agents on our side to be able to work as a video call agent. We took people from our live chat team and trained them how to do a video call. And without the partnership, we wouldn't be able to do this. So we leveraged the partnership, their ability to help us train the agents, and we were able to move forward really quickly. Some things needed to slow down. People weren't looking for loans, but we're still doing a lot with refinancing and mortgages. So a lot of it was shifting around. And a lot of people who wouldn't try digital before were all willing to try it. And we saw volumes grow exponentially during the course of the early days of the pandemic. Then when things start to open back up again over the summer, we still saw some of that digital traffic stay high. People were coming back in by appointment or different things in branch or calling us again. But they found a use case now for digital that they didn't have before. So we expect digital to stay high, and then people have now added it to kind of their toolkit to interact with us.
So I'm curious, shout out to Jed at Pop.io, great group, great product, kind of Zoom for credit unions is kind of how I look at it. But the Pop.io project, had the pandemic not come along, what would have been the traction for that inside the credit union? And when do you think it might have gotten done, or would it have ever gotten done? I'm just curious as to how that shaped that.
Yeah, so we had actually gone out to meet with the folks at Pop.io, about 1.5 years prior to the pandemic. We were like, hey, we need to get this in place, but it was always kind of that nice to have. It never really rose in the priority list until COVID rolled around. So it got passed on for other projects. But once it became we must have this now project kind of overnight once the pandemic hit. But it would have not had the traction. Yeah, it became table stakes. Absolutely. We needed this, and it also, and positioning it now. So should we have an instance where, our call center goes dark, we lose power in the region, it's now another alternative that doesn't rely on our data center to function. So it's now a cloud offering that we can, or if everyone has to go remote, that was another thing. We could do, agents from their home. All they need is a browser and a webcam, and usually what's on the laptop already is sufficient. So it makes us more flexible. To meet service needs should that kind of business continuity issue come up in any scenario.
And building on that, and I'm going to shoot this over to Kelly. My question is this: does the management understand that? Do they understand that Pop.io was probably needed before the pandemic? It's just nobody wanted to make that bet. And so you said you spoke to them 1.5 years. Being a vendor myself, 1.5 years is a whole long time, to wait around for a relationship.
Yes.
And that's a long sales cycle. That's the kind of sales cycle that you buy swords for yourself for. But as does the management understand that? And so I'll shoot that over to Kelly. Did you have any similar situations, Kelly?
Yeah. the word comes to mind is prioritization, right? There are a lot of things that we want to get done for our members, and the pandemic, I think, helped realign or reinstate prioritization of what exactly, right? What do you need to do? And then to Ben's point, it proves and revalidates that we can move quickly. Credit unions, right? We do have long sales cycles, and it takes a long time to, get to a place where you're ready to roll something out. And so being comfortable with getting something to market and allowing it to be a first iteration and to try again and to refine really does help, whether it's executive leadership down to even our team members, and definitely seeing the behavior in excuse me, consumers or members where they are trying new delivery channels that they haven't tried before, right? They were forced in some cases to use digital banking or to use our self-service channels. And I think another key part is really looking at, which isn't as popular, but what do those drive-up experiences look like? How important are those drive-up experiences in the event of this pandemic? But also knowing that, right, we're paying attention to all these delivery channels and not, and really making sure you're perfecting what that experience can be. Very similar to what Ben shared, we did not have video banking necessarily up and running, and we were able to put together, we did not go outside, we used kind of what we had in the kitchen, if you will, to put together a video solution. But that allowed us to really be able to draft some really good requirements to be able to then go out and to consider a fintech to potentially partner with in the future. A couple other things I would mention about what I feel like the pandemic has brought to life is really some support around process automation. Where is the work and how do you move the work through our organization so that the member can have the experience that they expect, and we should be able to deliver in a way that's quick and nimble, and allows them, again, to be on their couch, or whether they're in their car or wherever they are in their experience, that we're able to meet those expectations. And the last piece I would mention in terms of the pandemic, and really where our executive leadership continues to shine, is in really listening to our listening to our employees, and knowing that we need to help support our employees to also be able then to deliver the value to the member. So we crowdsource a lot of ideas from our employees, and we're able to then get internally better and more refined in shifting where our employees can go. So Ben, to your point, right? We can send them home and they can be able to do video chat or take calls, that our employees also, have good communication channels in-house to be able to serve the member regardless of where they're sitting. And so I really think that whole digital investment of the full ecosystem of how you serve your members, what's your delivery channels, what's the prioritization of how you get where the work goes, all becomes part of this conversation of what we can learn post-pandemic, of the things we did really well and the areas that we really want to focus on. So definitely think it's a full conversation, but the pandemic has really allowed us to look at those priorities and to move things around and allow things like video chat to happen, to allow things like internal communication platforms to come up, and then also to understand how important the connection to the member is, regardless if they can come in your branches or not. And just a shout out to a fintech we're working with, Glia is a member communication platform, and that really will allow us to move in and out of the member experience, whether they're starting on chat, they're on the website, they want to be able to schedule an appointment. Those types of things all become extremely easy when you're using a fintech collaboration platform. And so looking at, again, what is the niche providers of fintechs, and then what are the how can they embrace the overall experiences you're trying to bring to your members?
So I'm curious, something you said kind of piqued my interest there. So you said, hey, credit unions have long sales cycles, and the way you said it was a little accepting of it. And this is a good segue into Martin as well. Do you think that I know that water cooler talk of vendors like we don't let you guys in the back room where it's really bad. It's like behind the scenes at Disney. It's not pretty, but sorry Disney. But the idea is that if you're talking to vendors, as we look at fintech partners and with Big, which is something we do for people, we find sometimes we speak to them and they go, oh, you represent credit unions? Yeah, we don't have time for a 1.5-year sales cycle. Is that something you're changing, or do you see that as just sort of acceptable, or how are you looking at that in terms of your organization? And Martin, I'll be curious as to your experience being sort of newer to it and whether or not you feel like that's something you had to deal with. So go ahead, Kelly.
Yeah, so I'll take that. Oh, absolutely, John. So definitely do not want to, historically, yes, the sales cycle has probably been longer. I think we fit into the kind of that stereotype of that, but loving that we are changing our stripes a bit on that and embracing the word pilot, embracing that we can try and that it doesn't have to be, right? We want to get to MVP and really embrace that experience. And the FinTech providers really do help create an environment where that is something that we can do. So definitely agree with the sentiment that historically credit unions have been slow to adopt or slow to commit, but I really do believe that the process that at least the innovation department at Credit Union Colorado wants to do is to say, you know what, we're willing to research and experiment and embrace that word experimentation and allow us to move very, very quickly, which we've been able to do with this new GLIA GLIA platform that we'll be bringing to our members this month, and then embracing a chatbot solution through Posh, which will also allow us to model that behavior, John, of saying, you know what, we committed in December and we're going to have it to market within 90 days.
Yeah, I really liked, I like what you're saying there. I like the word pilot. I also like proof of concept. I think both of those are kind of terms that have not been traditionally embraced by the credit union industry. I really was interested when Ben said, hey, I think he called it his lab. And what I'm assuming that is a smaller group of members that are a little more, happy to sort of deal with something new. They recognize they're doing that, though, more likely to give you feedback. And I think that's something we've not always cultivated in the digital space, in the credit union space. So it's good to hear that you're getting there. And yeah, I'm glad you picked up on that. I just was wondering because some people may say, hey, this is what it takes to work with us to get it right. But the problem is that if we're scaring off, or if we don't catch them quickly, they get eaten up by a large bank, and then they don't allow those folks to interact with us anymore. And it's a fear I have in terms of that perfect union sort of statement. Martin, so you've been flying on the wall here. What do you think? What's the triangle defense that you have for us? Sorry, I'm just going to keep coming up with the NBA stuff now that you said that.
No problem. Yeah, certainly when I first joined the industry, I found the pace to be a challenge. In a past life, I could have contracts signed and something implemented to full customer base faster than I could probably get to even reviewing a contract in credit union land. And one of the things that happened for us with the pandemic is we learned how to move at a much faster pace. It wasn't that we couldn't do it before, but there was just a need to make it happen. In Washington State, we were the first state that had a diagnosed case in the United States. Sadly, we were also the first with a COVID-related death, and it hit us early. So we didn't have any other blueprints to follow. We had to start figuring out as a state and as an organization right away, what is this thing? And something new was being thrown at us almost on a daily basis that we had to figure out. Okay, we've got to close our branches. What does that mean? Well, we had Kelly mentioned prioritizing. We had a prioritized project list that had a lot of branch process improvement. Not a lot of need to work on that when the branches are closed. So immediately we need to start shifting things. We had a project on our board for a long time that never made it to the top, just to simply allow members to initiate a skip-a-pay request on a loan digitally. This is a project that we had slated and sized to be about a 4 to 5 month project. Pandemic hit, it rolled to the top. We changed our skip-a-pay program and made it available completely digitally within 3 weeks. And that was kind of the aha moment. And we did that with the project team working 100% remote. So all of a sudden, we've moved from this place of kind of a methodical, this is the way it is, and we've got too many projects on the board, and we're trying to do too many things at once, to this focus. We have to get this thing done now, bring the resources together, put all the energy into it and make it happen. And on the fintech side, we had something similar happen. We saw big spikes. On that Skip a Pay program, we saw a 4,200% increase in Skip a Pay requests from our normal volume. Unemployment benefit payouts, we saw a 5,000% increase in 3 weeks from the first week of March to the fourth week of March. And so we very quickly partnered with one of our favorite fintechs, Rate Reset, to put together a pandemic relief loan. And we were able to put that in front of members digitally very quickly and give them a way to apply for those loans and have them funded without having to set foot in a branch, which they could not do, without having to really contact us at all. So those were some of the things that, once we had that focus, we were able to move at a much faster pace, in some cases on our own, and in other cases, such as with the relief loan, with a partner like Rate Reset. We had another partner that helped us out with the PPP loans when that first hit, and we had to figure out how to make that happen. I think we had 3 days notice that they were coming and we were going to be part of it. And so another situation where we couldn't move at that traditional, credit union speed, so to speak. We had to get it done and get it done now. That urgency allowed us to marshal all of those resources. Everybody was completely focused on what had to be done. And now we're starting to see the fruits of that labor. Our project plan for 2021 had 80% fewer projects than the original plan for 2020 that ended up being pretty much abandoned. And so rather than trying to do so many different things, knowing that we're never going to get to all of them, we're finding that we're being a lot more focused on specific things that are going to have the biggest impact to the member experience, in this case, the digital member experience, because that has now become an access point. And we've seen a huge increase in digital adoption, especially as it relates to our mobile app, and that has not tapered off. Last month was our highest usage month ever, so we're continuing to see those numbers climb, and we don't really see that kind of going back to the previous levels.
So Martin, you can't go and do something that you slated for 3 months and 3 weeks. Now the CEO expects everything in 3 weeks. You should have called us. We could have all told you that, Kelly and Ben. My gosh. But let's, I want to, you said something I think is very interesting. So Skip a Pay, a 4,200 increase in that particular module. And I want to bring up a fintech here that or not really a fintech, it's a neobank, but I would consider it somewhat of a fintech. Let's talk about Chime for a minute. Chime is a huge competitor. Certainly, and they're number one. They've just grown. It's 14 billion-ish or whatever the number is. They have 8 million members, less than 2 years, and their number one claim to fame, if you go to their website, is that they give you your paycheck when it shows up. So if you've got an ACH from working for whoever you work for, when it hits the ACH warehouse, they go ahead and comp you that money, or even sooner. Crayons, as far as I know, and I bet every Crayon on this call has done that since probably years and years and years and years ago. I know Suncoast had it in 1997 when I worked there. So why is it that these guys, these fintechs, kind of startups, these neobanks, they don't even provide loans? So why is it that these groups are winning so heavily with the next generation in this space? And I guess as part of the lightning round, and I'm trying to keep this on time, I didn't hear much about digital marketing. I'd be interested in. I did hear from Martin. Martin, you mentioned in a tangential way that you had all this data, but I didn't kind of hear if you were going to be involving this. But I know it's something that Crayons have to get better at, because this whole digital experience also means sales in a way, which is something that's been kind of a dirty word in the Crayon space for a long time. We don't do sales, we do customer service, and sales will come. But that's not how it works in a digital world. If I went to any of your marketing and said, hey, listen, I want to email all the members 4 times a week, they'd say, what are you, crazy? They'll never listen to us again. But yet Chime is emailing me 4 or 5 times a week. And guess what? I joined to see what the process was. Similar thing with Carvana, right? I just bought a car through Carvana. What an incredible experience. Now I'm shifting the loan to a credit union, of course, but I will never go back to a dealership. That was awesome. So I guess what I'm asking is, what are some key areas that will help us catch up and compete in this new world? Or do we see a need to do that? Do we see a need by our management that's saying, no, we don't want to try to out Google. We want to stick with our plan of being people helping people, kind of niche based, or do we want to, but at the same time, how are we going to get the message out in something like Skip-a-Pay or like the payment program so that we're not losing these new kids and new banking folks to these new neobanks? I'll start with Ben. He hasn't talked in a while.
Yeah, so a lot of the reason we created our innovation center and wanted to focus on how do we leverage fintech partnerships was to attract the newer generations coming to the universities that we partner with. They're coming in with bank accounts through people like Chime. They're looking at those digital only brands. They don't see the need for checkbooks. They don't need, some of them don't even need a debit card. They want to be able to use things like Cash App, Venmo, Robinhood, what name of fintech that's popular and out there. They want to try those. They don't see the need for a bank account. They're happy to transfer money back and forth between Venmo, PayPal. Why do they need it? Why do they need credit unions? So a lot of the struggle is how do you educate them? And we're competing with that technology. We're not just we have a lot of the services, but do you have to fill out a paper form? Do you have to come into a branch? Do you have to call? Is 90% of it a digital transaction? But there's still that 10% that slows it down. Someone like Chime, they have a lot of great advertising that really targets that, generation that, hey, they are a generation that they're looking to get their money faster. They're cash strapped. They want the money 2 days sooner, and that makes a huge impact on their life. We could do that, but are we selling? Is that our main selling point to these people? And that's really, they're really smart with that segmentation. They're really smart with the targeting of the marketing, and then they back it up with digital only processes that you can do 100% online. You can sign up. You can have everything done within 5 minutes. And then there are things like, a more local, Rocket Mortgage, there's a lot of great advertising surrounding that. Yes, you can get your application done quickly, but there's a lot of processes in the back end that aren't truly a 5 minute. You have the check to go buy your house with after 5-10 minutes. You're in the pipeline, but they do a really good job of that customer experience and making you feel like you're engaged and they follow up. And a lot of it is digital and they really focus on the experience. And I think as credit unions, we're people helping people, and we have a lot of the service mindset. We just got to translate that into digital, and the CX industry, or maybe calling it MX for us as member experience. Really it is putting members first in digital.
Yeah, I think you make a great point on. We've had these processes, but because they're not digital, we're not winning. But I wonder if are we afraid that in Martin's case, and maybe Martin, you can speak to this. Oh, by the way, lightning round. Number one area that and I'm talking big areas, payments, blah blah blah. Number one area that, and by the way, once one of you picks one, the other one can't use it. That's the rule. So sorry, you can't say, oh, I agree with Ben. So Ben, what's your number one area that a fintech can help?
Yeah, I think it's card utilization. So payments overall.
So payments, okay. So payments, fintech payment providers, you think will really provide a good value and a good lift for the organization.
Yeah, absolutely. The more contextual commerce in there. How do we get our?
Yeah, go ahead, Kelly.
No, I was gonna give Ben say, hey, you took mine, but I'll go with that personalized lending. And that one-to-one it's to me the credit union space is all about the relationship. I think that's our niche. Our niche has been relationship. I think that certainly we have a ways to go. A report I was reading recently, right, 87% of millennials don't really know what a credit union is or why we're different. So definitely believe that somewhere between, right, us allowing our relationship-based niche to really shine through, and then to the point we've all made today, which is that you've got to back that up with the digital offerings. It has to be easy. It has to be fast. But I'll go with that personalized lending. And another shout out to Rate Reset. We did something very similar. as Martin did, and it was very, very successful, and members are open to being communicated with, but we do it in a way that is personalized, I think, is the key piece.
Yeah, I think if there's valuable information, they're all for it, and that's what Chime does. I like I like their knock knock product. I think that was pretty brilliant. I was there when Keith conceived it. I happened to be in the bar when he came up with the idea. So, but I think from the perspective of lending overall, one of the things that as I look at the industry that needs to shift, and I think Ben alluded to this, is, we got to remember that we're not competing with, sometimes we're competing with things that just aren't even in our wheelhouse. Like, you can have your transfer sort of mechanism in your home banking compared to, say, Amazon's checkout, which are very much two different things. But the drop down and how it works, and the mechanics of it. So that's fascinating to me. And then Kelly, and I want to extend this one on to Martin afterwards. Do you feel as though one of the reasons that marketing doesn't want to market, or management doesn't want to market something like the Skip a Pay or other these things, is because they're not a digital process, and they're worried that it will be overwhelmed, or that the members will be underwhelmed by the process? Is that something that you think is happening?
No, I think it's I do believe it's a mindset shift in regards to how you embrace communicating with the members, and making sure, it definitely needs to come from a consultative perspective that will feel good to the member and feels good to the credit union. And that goes back to the data conversation that Martin, you brought up, right? Which is really leveraging our data. We have embraced a data warehouse that is going to continue to allow us to really personalize that experience. John, you mentioned Carvana, I think, is a very interesting use case, which is leveraging these relationships and that experience we can offer, and putting it into embracing that experience through the relationships we already have. Do we know that John Best wants to buy a vehicle before he knows he wants to buy it? And how do we make sure that we enter the conversation at the right time? I do believe definitely is that I wouldn't use the word fear. I think it just needs to be really tailored in a way that that it's not another marketing piece of email that comes across. And can we leverage things like our digital banking and our mobile apps to really be able to communicate with a member and just educate them, and then allow them to take action if it's the right time? So I would say yes and no, right? Credit unions learning and embracing a new style of communicating with our members, but also knowing that we can leverage the relationships we built with them, that it's in a vein where they really do need these services, and we're showing that in the channels where they choose to be.
Give them what they want, where they want, when they want. That's what we all dream of. Martin, so you had a 42 million% increase in digital skip a pays, or whatever the number was. It was amazing. Was it just because you changed it to digital, or was it because once it became digital, they felt more comfortable advertising it? Was it because you took the process and to Kelly's point, it introduced maybe some RPA, some robotic process automation that made it faster on the back end? Give us a little of that story, and then you have to choose amongst sort of and I know you're newer, so I'll give you it can be any sort of area of the credit union that we provide services for, deposits or whatever. So go ahead.
Sure. Yeah, in terms of why we saw the change, there was a combination of demand. There was a notable change to the program itself. It used to have a fee associated with it. We waived the fee. You used to only be able to do a skip a pay for 1 month. We changed it to 3 consecutive months, and then we got that message out to the members. We put messaging in the logon screens and some promotional screens inside of digital banking. There was email communication. At that point, we were, I believe, back to having drive-throughs open at the branches, and we were communicating it that way. But there's no question that the access point was critical. I believe we were somewhere in the neighborhood of having about 75% or more of those skip-a-pays being requested through the digital channel versus through our other channels. So it was kind of a combination of those things that created it.
Well, and demand, I recognize that.
No question, no question. For the lightning round, in terms of what's the thing that fintechs I think can do to have the biggest impact? I think it's access. Thinking about the I've heard numbers as high as 40%, 30 to 40% of the population being underbanked or unbanked. This idea that the entire financial services institution was built based on people that have a consistent paycheck that shows up in the same amount at the same interval, and it's very predictable. With so many people having to leverage gig work to either supplement or comprise their entire income, between that and business owners and just other people that don't have that predictability. I think there are fintechs that are finding ways to do a better job of addressing their needs specifically. And I think that's a place where we can really win with those partnerships, is in just providing access to a lot more people with the types of services that will really be valuable to them, versus trying to kind of wedge them into a business and product model that doesn't really work very well for what their situation is.
Yeah, credit unions were created. Part of the charter is the underserved. I love that answer, because there are plenty that don't have access to the financial services. All right, so we're going to go. This is it. We're done. We're going to do the lightning round. You get one sentence, and here's the one sentence I want from you is, they're sitting, your credit union, you're sitting, you're watching this, and you want to hear from each of you. And remember, you can't just echo each other. So even though, and I'm going to let Kelly go first, but the idea that what's the one thing in a short sentence that a credit union could do to better prepare themselves to interact with fintechs? What's the one thing? And it's could be buy a product, it could be create a process, it could be whatever, but just a short sentence on what that is. How can people be better prepared based on your experience in the last year? Kelly?
You're going to make me say one sentence, so I'm going to stretch that out with a lot of ands. No, I'm kidding. I would say the one thing that credit unions can do, that we are walking the talk currently, is to really establish a pilot timeline with expectations, and to allow yourself to understand what it means to pilot, what's the look back, and then how do you repeat that and get better over time.
I love that answer. So it's a culture shift in a way, and basically you're saying, hey, we have to explain to all of our people in our membership and everybody what a pilot is, and be ready to implement one and know what it means. And from my perspective, that means getting everyone to agree that they're not going to get the 100%. And that is the hardest thing in the credit union culture. They all expect sort of that 100%.
MVP, right? They expect 100, and we've got to get to where we can get to, I've heard 80 thrown out there. But Ben and I talk offline several times, and it's like, wait, what if we get to 60? What if you get to 50, right? 50 is enough to get you to market, and then you can work back and get and retain the rest of it. So absolutely, I think that iterative ability to say we're not going to get to perfect on the first pass, and then from there we're going to iterate and retry and see if we can get somewhere up to right 70, 80, and then over time continue to work towards that 100.
Got it. Love it. Martin, you can't use that now, so you're up.
I would say be open-minded and be willing to experiment and possibly fail. I think that there is a fear of, it's the 100% thing, right? We got to get it all, and it's got to be exactly right on the first go. Chances of that are pretty slim, so we're really setting ourselves up with a really high bar, versus being able to come in and say, hey, here's an idea, it's interesting, these guys are doing something a little bit different. Okay, our members aren't necessarily asking for it, but that doesn't mean it's not valuable. It's not going to be perfectly integrated into the digital banking experience and white labeled and all these things, but that doesn't mean we couldn't put it out there in front of our members and see what the reaction is. So that open-mindedness and willing to take a shot at it, I think is key to really being able to leverage the best of what fintechs can offer.
Yeah, I'm going to make two comments on that I think are really good. One, the old Henry Ford quote, right? If I had asked people what they wanted, they would have said a faster horse. And I certainly believe we're at a stage, and it's not always true that we don't need to ask people, I think we need to show them what we have and get feedback. But certainly, I think that's an important concept of it. The other side that I thought we do often in the credit union space, and you may have noticed this in the culture, conflate incompetence with failure. And there's very much two different things. It's okay to fail, especially if you tried and did everything right. Incompetence is a whole different thing. And unfortunately, due to regulatory stress, a lot of other things that a lot of these fintechs don't have, that gets conflated within the organization. So, but I think it's a great answer. Ben, you're closing it out, man. Bring it home.
Yeah, still two good ones there. But taking it from a different angle, I think being willing to try, being able to learn about the fintech industry. There's a lot of great events, like the one we're on right now. So good job in coming to this one. There are a lot of events throughout the year, especially now that COVID pushed a lot of things virtual. There's a lot of access to see 5 fintechs in an hour in a webinar format. Really is probably the best way to learn about what's out there and see use cases. And a lot of them are showing you what they're doing and what they're looking for in terms of a partnership, and pick one. So really just try something. Pick one, educate your employees, educate your members, educate leadership, why, all the things that were said by Kelly Martin, but then just pick one and try it. You may fail, and that's great. You learn from it, you move on, but it's most important to try, and there's a lot of opportunities to learn what's out there, and maybe a safe way to try it the first time around.
Yeah, I think if I learned anything from you, it's building that safe model to try it, the lab, where they sort of expect to have problems. Well, listen, guys, first of all, I want to just big round of applause, and we don't have any people, but thank you so much for all of you taking the time, the precious time out of your day. You're all extremely busy, and this pandemic isn't over yet, to come and talk to us and share your insights, your opinions, your successes, what you've seen out there with this group. I also want to thank Fintech Talents of North America for having me and bringing this session to life, and including credit unions, in this space. We're seeing that combine a little bit more. That's another sort of evolution of the industry. You wouldn't have seen sort of these two things, converge into a banking and community banking and a credit union sort of space. So that's really awesome. This has been how to create a more perfect union amongst the fintechs and credit unions, and we thank you for listening and watching.